Red 75 points higher, and it's a good start.
Autos are doing well. The Nifty Auto Index has a gain of close to about 0.7%.
Nifty is up around 30 points. We also have the Bank Nifty, which is in line with the benchmark indices.
Small change right from the morning on. I mean, the initial bounce got sold into, and after that, nothing. The market is up, 40 points. 17,150 is where we are ending. Banks doing decently okay.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. A range-bound session on Dalal Street ends with marginal gains. The benchmarks close in the green, led by ICICI Bank, Reliance Industries and TCS. Market breadth favors advances, with 3 stocks advancing for early 2 that fell. Hindustan Zinc announces an interim dividend of nearly 11,000 crore rupees at 26 rupees a share. The company's 4th interim dividend this fiscal will give promoter entity Vedanta nearly 7,000 crore rupees, while the union government will garner 3,000 crore rupees. However, this move will drain the cash reserves of HZL, leaving it with just 400 crore rupees. Life insurance stocks are back in favor for the first time since the tax blow following the budget. This as analysts turn upbeat on the sector following a new policy regime and valuations boosts. GAIL gains after India's all-sector regulator PNGRB hikes average tariff by 45%. This is for the integrated pipelines. This is for the year FY24. The tariff hike is in line with street expectations. Gold prices correct for the second straight day as treasury yields jump, easing worries of a banking crisis. Heavy profit-taking and less risk aversion also weighs. Investors now await the US Federal Reserve's interest rate decision. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have S. Narain, ED and CIO of ICICI Prudential AMC. And in Corporate Voices, we have Chandrasekhar Ghosh, who's the MD and CEO of Bandhan Bank. And with that, first up, let's get you all the action from Dalal Street. Nifty and Sensex ended with minor gains after a range-bound session ahead of the US Fed meet. The broader markets rose in line with the benchmarks. ICICI Bank, Reliance and TCS led the Nifty higher. Prashant Nair is here with the wrap. Prashant.
A relatively quiet day, and it was mostly waiting for, of course, the big event, which is the Fed decision later tonight. Overnight cues were positive. Wall Street handover was good. Asia and the markets here started up, but then quickly gave up gains, and for the bulk of the day did not do very much, traded with just about 20 to 40 odd point gains, depending on when you looked at it. Banks also about a quarter percent, just under a quarter percent in terms of gains on the Nifty Bank. The pockets of gains today were in pharma, public sector banks, and the small cap space, which held out. I mean, small caps also by close came off the high point, but ended about 0.5% in the green. The government companies pack, the CPSE index was the sort of not significant loser, but was noticeably lower. Gainers on the Nifty coming through in lots of financial names, not banks, but HDFC Life, Bajaj Finserv, Bajaj Finance, SBI Life were some of the prominent gainers today. Sun Pharma from the pharma pack was the other gainer there. Broader markets, gains coming through in names like Paytm. Actually, you had these stray moves, which very sharp, high sort of price gains, which stood out. Adani Total Gas was another one. Fine Organics, Uflex, Krishna Diagnostic, Monte Carlo, VST Tillers are some of the names which jumped out at me. On the lower side, Sobha was a big cut. It's the largest Bangalore-based property developer, and it's basically now back to pre-COVID levels. Sale was lower. Policy Bazaar, ABB, Ease My Trip and Saregama were some of the other volume-led losers that we had. A 25 basis point hike is expected from the Fed, but beyond the action, what will Fed Chair Powell say in the press conference with regards to preserving financial stability and achieving price stability as well, which is controlling inflation? I think that will set the tone when we return tomorrow.
Prashant, thank you so much for joining us with that analysis. Let's get you some important market opinion now. S. Narain, who's the ED and CIO of ICICI Prudential AMC, says the market could see a relief rally post the Fed meeting. He adds banks are reasonably valued compared to other consumer discretionary sectors. Take a look.
See, at 17,000, valuations are much more reasonable, and the global macro people are just too short on everything. And we have a Fed meeting today, and it is possible that there can be a good relief rally if all the shorts in the system have to be taken out, there can be a very good relief rally. The global funds have just turned too negative at this point of time without reason because they had to go short somewhere and they found India a good place to go short. So I think tactically we are very well positioned, but at the same time we don't believe in very big market rallies. Every one of the domestic funds and every one of the global funds has roughly 25-30% in banks. So if there is a redemption, people have to sell 25 to 30% banks. So till you see good inflows, banks don't perform, not because it is attractive and unattractive, but because it is a big holding in every fund. Of all the consumer discretionary stocks, this is one of the sectors where in the last 10 years there has been very low growth. So people don't put implied growth assumptions which are ridiculously high. So that makes the industry much more reasonably valued compared to many of the other consumer discretionary industries.
All right, that's some CN opinion coming in. Let's stick with the market opinion. Ashwath Damodaran of the NYU Stern School of Business believes the SVB crisis is a perfect storm. Listen in as he explains why.
What happened at Silicon Valley is a perfect storm. It's the collection of macro forces with interest rates going up significantly and risk capital going to the sidelines that effectively brought the bank down. The one thing that Signature, First Republic and Silicon Valley Bank share in common is they're a little unbalanced as banks. I mean, with Signature Bank, it was the dependence on cryptos and wealthy real estate developers. With First Republic, almost 70% of the deposits are uninsured. They cater to a wealthier group of investors. Their wealth management arm is very strong. So I think what this is a signal that if you have an unbalanced bank, a bank that's grown by catering to a segment of the market, it's more exposed than a more balanced bank.
Okay, let's stick with the outlook on Dalal Street. CLSA says that it's time to buy despite the bearish sentiment that's gripped the market. Nimesh Shah is standing by with the details on brokerage's view on markets after this big fall.
If you look at the Indian markets, they've been down 6%, actually underperforming both EMs and DMs since the beginning of the year. And there is a lot of pessimism in the market, right? The sentiment is very weak. And that's the reason why a couple of brokerages have turned constructive and they believe it's the right time. So CLS has put out a note today morning. The headline is very interesting. They believe it's a contra buy time. In fact, the sentiment is very bearish, and that's the reason why they believe one should add beta into the India portfolio. While they have a proprietary India Bull Bear Index, and that is at a 91% bearish level. And barring few instances in 2008 and 2020, there has been such instances of 10 times, and 9 out of 10 times this is proved to be a good entry point according to the CLSA note. So that's a important point to track. Now, in terms of stocks, they are advising clients to add Reliance, Hindalco, and IndusInd Bank to the India portfolio at the cost of Infosys and NTPC. So they've removed these two names and they've added the names like Reliance, Hindalco, and IndusInd Bank. And all the stocks have actually been underperforming and are down 15-20%. So it's a good entry level according to CLSA. Similarly, Citi has put out a note today morning. Even they have a very similar view. They believe the risk reward is quite favorable at this point in time as far as India is concerned. And the key reason is India is down 6% Y2D. But if you look at the emerging markets or the developed markets, India has been a relative underperformer, down 8% and 11% respectively, and hence the risk reward is turning quite favorable. Even from a valuation point of view, we are pretty much close to that one standard deviation below the 5-year mean, which means a good entry point going forward. Even Citi has a sentiment indicator, and that has turned positive for the first time since July 2022. They are expecting mid-term returns, but at least it has turned positive as far as Citi note is concerned. While they have cut the multiples a notch to 17.5 times, but they have a March 24 Nifty target of 18,500, so meaningful upside from current levels. So, and they've in fact added in the preferred list Interglobe as well as GAIL. The big point is that given the Indian underperformance, given the sentiment which are there right now, a lot of brokerages, including CLS and Citi, believe it's the right time to enter, and it's a contra buy time according to the CLSA note.
Thank you so much, Nimesh, for joining us with details of that interesting note. Moving on to the second headline now. Hindustan Zinc has announced an interim dividend of nearly 11,000 crore rupees at 26 rupees a share. The company's fourth interim dividend this fiscal will give promoter entity Vedanta nearly 7,000 crore rupees, while the union government will garner 3,000 crore rupees. However, this move will drain the cash reserves of HZL, leaving it with just 400 crore rupees. Nigel D'Souza is here with the details. Nigel.
Well, that's right. Everyone was wondering whether or not Vedanta Group has a way out. There were fears that Vedanta Resources will default on some of their payments, but that was not to be. And we had laid out that there were a couple of options that they had on the table, and they've taken the easiest possible one. That's a dividend payout. So late last evening, Hindustan Zinc has declared a dividend of close to around 26 rupees per share. That takes the total dividend payout in this fiscal itself to around 75 rupees and 50 paise. Now, this 26 rupees per share, that equates to close to around 11,000 crores odd. And out of this total quantum, well, the promoter entity, that is Vedanta Limited, the listed entity, well, they'll get bulk of that. So they'll get close to around 7,100 crores. That's good news from a Vedanta Limited standpoint. Now, the Vedanta Limited shareholders will be hoping that all the dividend that they receive will be passed through. And if that is the case, it equates to around 19 rupees and 20 paise odd. Now, that's good news for the Vedanta shareholders. And from there, the majority of it will go to the Vedanta promoter, obviously, who has close to around 70% stake. That could equate to around $600 million odd. And that's enough to service the near-term debt obligations of Vedanta Resources. So good news for Hindustan Zinc shareholders, better news actually for Vedanta Limited as well as Vedanta Resources as well. Out of this total quantum, bulk goes to Vedanta Limited. The remainder of around 3,000 crores odd will go to the government of India. So that explains why both the two stocks are doing pretty well. Back to you.
Okay, all right, Nigel, thank you so much for joining us. The third headline now, life insurance stocks are back in favor for the first time since the tax blow following the budget. This as analysts turn upbeat on the sector following a new policy regime and valuation boost as well. Surbhi Sutaria is here with all those details. Surbhi.
Post the budget announcement of taxing high-ticket non-linked savings policies, all eyes are going to be on the premium growth numbers for the last quarter of FY23. The Feb business data shows divergent growth trends, where the private life insurance players saw an 18% growth in their retail APE, whereas LIC declined by 3%. Now, this growth should be seen in the context with the recent budget change and the fact that there are only a couple of months remaining now to escape the impact of taxation change. This is evident in their numbers as well. Most of this growth is led by high-ticket size policies and not by the number of policies sold. The average ticket size is up 32%, whereas the number of policies sold is declined by 15%. In the listed space, all players, barring SBI Life, has seen an average ticket size growth of 15 to 20%, whereas the number of policies has declined by 2 to 21%. This growth is expected to continue in March as well, as the pre-booking of high-ticket non-linked savings products will continue till the end of the fiscal. Now, the analyst estimates suggest that the companies will see a growth of anywhere between 15 to 40% as opposed to 5 to 10% same time last year. However, that number needs to be monitored is the number of policies sold. With all the negative sentiments around the budget announcement, there are a few amendments that can work in the favor of the sector as well. The possibility of a composite business license that will facilitate open access for the company to operate in any kind of businesses. And also, the regulator has proposed to simplify the existing regulations on commission expense and expense of management, which gives greater flexibility to the company to structure their commission payouts. However, the real question is, will these amendments outweigh the negative impact brought on from the budget announcement? Life insurance stocks have corrected anywhere between 11 to 23% since the budget day, and all of them are almost close to their 52-week lows. When you see their valuations on a one-year forward basis and compare it to their pre-budget levels, it has corrected quite a bit, with HDFC Life seeing the most correction, followed by SBI Life and Max Financials.
Surbhi, thank you so much for that interesting take. With that, we'll slip into a break now, but stay tuned. We'll be back in a bit with the other headlines.